Stefanutti Stocks saw interim diluted headline earnings per share rise by 36% to 34 cents. The company notes that its tender margins remain low due to the scarcity of infrastructure projects and limited mining and industrial concrete work. The chief executive of the company joins us now, but those headline earnings per share numbers are a little bit distorted, Willie Mayberg. I'm sure you'll agree. Your depreciation charge is the reason for it.
Yeah, I think even though some of our divisions didn't perform to our expectations, I think we're pleased with the 3.5% improvement in the operating profit. What's important to us is that the strong business units like the structures, they perform well again as usual. And also the roads, pipeline and mining business unit, they increased their contribution towards operating profit. The problem still lies in building, and we're trying to get out of the woods there. We still have some legacy projects in historic projects on contractual matters we're dealing with in Mozambique, and then there's the current projects in South Africa where there are compensation events or claims that we need to resolve as a result of change orders and also scope changes. But we are in discussions with the clients and to see if we can resolve it. It's unlikely we will resolve it this next 6 months, but yes, we are working close to that. And then mechanical, electrical and power. Mechanical and electrical has done well. They were profitable, and unfortunately power, there were some losses and also some holding costs, mainly as a result of not work coming to the marketplace from the national energy provider.
I thought I was going nuts here, so I've just checked the SENS announcement again. Your EBITDA was unchanged from last year.
Yes.
Your depreciation number was reduced dramatically.
That's correct.
A non-cash item, and as a consequence of that, your profits were up 35%. That's not an operating issue. That's a depreciation issue that assisted you.
Well, it is. We have not gone backwards in terms of EBITDA, and I explained to you the main reason for it was the losses, the 43 million rand loss in building, where we still incur losses, and we can see that going forward for the year.
I got it, but you aren't 35% up in this period. In fact, if I look at the way your operations are going, I see your operating cash flow is down substantially. So you're telling a good story, but I don't know if I'm buying it absolutely. Maybe what's it looking like in the next 6 months?
Well, in terms of the EBITDA, we could see that it will be stability and also possible improvement in EBITDA. But I can also say to you that there will be a reduction in depreciation because we're spending less on capital equipment, and we're probably going to spend only 130 million rand on capex by financial year end, which is down by, we spent over 285 million the previous year. So we're managing the business, and in a way that's not only in operation side, we're paying close attention to the loss-making projects where we have got problems. We're dealing with that, and it's taking some time for us to get out of the problem issues, especially in building and in power. But the rest is doing well.
Tell us about Geotechnical, because you've got a geotechnical operation.
Yes.
Isel Frankie has now been bought out by the global giant, they tell us. Is that going to change the competitive environment?
Well, I'm sure that the new owner will still compete in this market. I don't think they will pull out of the South African market or the Southern African market. So that market is still competitive. The fact that it's dependent on the development of buildings, which is still not happening to a large extent, although there are a number of projects in the building market, not so much in Gauteng where there's piling required, but we operate quite effectively in Namibia and Botswana and Mozambique, where all the contracts now are profitable, and there's less piling required there. So yes, in geotechnical. So within South Africa, the market's competitive, but outside our borders, yes, we're doing well in geotechnical.
How are your confidence levels after the fine that you were hit by the Competition Commission regarding the collusion in the construction sector?
Well, I don't think the confidence level of the business is any different, that we're negative. I think these are things that happened in the past, and we're busy paying our penalties. We pay the first installment, and we have also settled all the projects within the fast-track system, and the 2 projects that were outside the fast-track system, we also settled that. We're starting to pay the penalties. And we can't say we've put that behind us, because we need to deal with what's ever coming our way going forward. But in terms of business confidence, we feel that we're in a much better position than 8 months ago, where we had more operational issues in the business. In actual fact, we're only dealing with building and power now.
What about First Strat? It's been a big story here. You managed to pick up one of the businesses. How well was that business managed?
Well, I can't tell you how well they were managed. Obviously, they had a major problem in terms of their cash issues, and we had an opportunity to buy Energotech for a very, call it a cheap price of 1 million from the liquidators. They have been included quite nicely into our electrical and instrumentation division, and I must say they have added a lot of value in terms of capacity and capability going forwards. And in terms of our offering with our mechanical electrical, I think it was a good acquisition for us.
Because it was fast-tracked through the Competition Commission. Was that because it was of strategic importance to Medupi or somewhere?
No, it was not Medupi. It was at Sasol, because there were projects approaching from Sasol side where they had to do shutdowns, and Energotech, prior to joining us, when they were in the first stage group, was an integral part of that. And Sasol assisted that because of strategic reasons from their side.